Good afternoon, everyone. Thank you for joining in for another Tuesday Tips by the Hennigan Realty Group. And today we are going to be talking my favorite investments. Well, more so, it's going to be about getting a home equity loan. And we know a lot of you count yourselves out, don't think you can do it because you don't have a ton of money on the side, but you do have property. And maybe you just bought your property and still thinking you can't do it, but houses are appreciating over the past couple of years. So don't count yourself out. But today we are going to bring in an expert regarding the matter of home equity loans. And from that, I will let Ms. Dana take over.
All right, so I don't have much to say. I'm just going to go ahead and introduce Miss Karen Newman. She is one of our preferred go-to lenders.
Maybe we should introduce ourselves first.
Yeah, we did not do that. I mean, I would think that they would know us, but just in case, go ahead.
For those that don't know, I am Roland Hennigan. I am one half of Hennigan Realty, and I'm here, to answer any questions or at your service.
All right, and I'm Dana Hennigan. I'm the other half of Hennigan Realty, and same thing. I am here to hold your hand, answer any questions that you guys may have, and to educate you guys on real estate and to give you all kinds of nuggets. We are here to give you all kinds of nuggets so that if you're interested in purchasing a home, if you already have a home, you don't know what to do with it, that's why we have these Realtor Tip Tuesdays to bring you additional information. So without further ado, we're going to bring in our expert for today, Karen Newman.
Hello, everyone. Hi, how are you?
Good. How are you doing today?
I'm doing well. Excited to be here. I want to thank you all for having me on. It's always a privilege to collaborate with young professionals like yourself that are making milestones and setting their own footsteps in the industry. So I'm just happy and excited to be here with you guys.
Well, thank you so much, and we're happy that you're here with us.
Yes. So Ms. Newman, you want to just go ahead and introduce yourself to everyone?
My name is Karen Newman, as you said, and I am a mortgage loan officer with NRL Mortgage. I've been a licensed loan originator since 2010 and have a bulk of experience in various aspects of the industry. We're going to talk today about home equity lending, which I think is something that in the current market, a lot of people are kind of looking at equity loans, especially with valuations and things like that. So I think this is really a timely topic, and hope that everyone will be able to, it'll be some good information to share that will take you forth into, whatever is next in the industry.
Right. And if you would like to get in contact with Ms. Newman, you can reach her. Her information is at the bottom. We'll also post it to the website and to our post on Facebook, and then it'll pop up as we go. And of course, before we end, we'll have Ms. Newman to give us her information again, so that we can know exactly how to get in contact with her. And so, do you want to jump straight into your presentation?
Well, sure. That would be fine. What we're here to just kind of give you, just in the time that we have set aside, we just want to give you a brief description of what equity lending is, and to hopefully help you to better understand equity and how it works and how you can use it to leverage your equity in order to be able to invest or finance other purchases or things that you need to do. The definition of equity, the short answer is the difference between the market value of an asset that you own versus what's owed against it.
Okay.
Oftentimes people don't really, they know if you own real estate, you understand that real estate can, it appreciates, hopefully it appreciates over time. And so there is what you call equity in the asset, but most people, what they get confused about is how to use that equity to leverage other purchases.
Right. And I think that's a big topic. I think even for now, you have a lot of people talking. We've had this conversation about how, people are freaking out about the market where we are right now. And this is a perfect time for those who own homes, to start to look into, your equity and what you can do to monopolize on this time of interest rates may be going up. Things seem to be kind of slowing down a little bit in the market where it's not as crazy. We're still technically in a seller's market, but it seems like it's starting to switch over to a buyer's market. But if I have a home and I have equity in a home, what should I do? How can this equity help me as a homeowner, current homeowner?
Well, first of all, yes, Dana, for to kind of elaborate on that, equity can be used in a volume of different ways. I think, as I said, the biggest issue, I think, in a lot of cases is that people don't really understand what equity is and some of the ways that you can use it. Obviously, if you own real estate and you choose to sell that real estate, then of course the equity that you will realize from the sale is the difference between whatever the current valuation of that property is versus what you owe. Of course, in this market, there are a lot of people who are choosing not to make another purchase because for, a variety of reasons. But I think the biggest issue is that you may not be able to find a comparable property for the price that you're going to have to pay a higher price for it, for a comparable size property, location, or whatever. And so, but there are some other things, particularly, for example, if you own a piece of property and you're looking to make other investments, or if you have repairs that may need to be made to your home and you're looking for a way to finance those repairs without using high interest rate credit cards and things like that. Equity can be used, is one of the options that you would have in order to finance a large purchase. In most cases, there is going to be a limit to the amount that you can borrow. But I mean, the biggest point that we need to make is that people need to understand is that the only way to access your equity without liquidating the asset, which is your home, is by borrowing. I think a lot of people, sometimes I'm approached and people say, well, I have equity in my home. Can I use that equity to make another purchase? Of course you can. However, it's in the form of a loan. I think some people kind of think, okay, I have this equity and I want to use it, but since it's mine, I should be able to just say, well, hey, okay, I've got this equity, and then there's no exchange. And that's the part that people have to really grasp and really understand. And then once they understand that, then you can figure out how to make that equity work for you and still retain your asset.
So with that being said, being that it is a loan, so I'm hearing that I may have to have certain credit scores or there may be certain requirements. So what are those requirements that I would need to have in order to tap into my equity loan, to get an equity loan?
Well, typically equity financing, whether it be in the form of a cash out refinance of your primary residence or a standalone home equity loan, or either a HELOC is what we call it, a home equity line of credit. It is, acceptable credit and income is going to be a standard. And it's going to be the same as if you were applying for any other type of financing. You do have to have acceptable credit. You have to show that you have the capacity to repay the debt, to make the loan payment. And so for the most part, on the average, I would say, maybe 640, 650 credit scores, depending on the lender and which option you take. As I said, there are various different ways of accessing that equity. You can do if you are in a situation where most people probably aren't, especially since rates have been so low for the last few years. Most people by now have already probably refinanced their first mortgage, unless they were, there are some people that had, more than 10 years in, did not want to start over on a longer term. So for whatever reason, they may not have, they still may be under that original, 5% interest rate. And so one of the things that you do have to be aware of, if you decide to do, for example, like a cash out refinance, where you refinance your current mortgage for a higher amount than what you owe on it. And so the difference is, what happens is that original loan or that existing loan is paid in full. And the difference between what you owe on that existing loan and the amount of the new loan is the equity that you're able to pull out of it. Okay. And when you pull out, that's called a cash out refinance. But understand what you are doing is you are refinancing that first mortgage. So depending on the term that you choose to take, whether it be a 15-year or 30-year term, you're starting over on that mortgage. And so, for some people, for many people, it's a bit of a turn off, or it's something that you definitely need to give some thought to and some consideration to. Because if you're well into your mortgage and you have, say, less than 15 years left, then you need to understand that, yes, I can pull this out. I can do it on a 20-year or 30-year, which would help me to have a much lower payment. However, long term, you're paying more because you're financing it for a longer term. So once again, you just have to understand and consider all aspects of the financing. But to answer your question, average to, good credit is going to be essential in order to be able to get approved.
Okay. Well, let me ask you this, and that's some good information. I appreciate that. But let me ask you this, Ms. Newman. When most people think about equity, they think about how long they've been paying the mortgage on their property and how long the principal has added up and how much, and they're looking at it from that point of view. But what if you just bought your house recently and it appreciated? So is that considered equity too? And if so, how does that work?
It is still considered equity, and it basically works the same way. And particularly with people who may have purchased a home, new construction. In the past year, I've seen some crazy things that have happened because how rapidly the market was appreciating. They started out on a contract with an agreed upon sales price with a builder. And by the time they got to closing, which may have been 6 to 9, sometimes even 12 months later, that value of that home had significantly appreciated from where they started under contract. There's no limitation on when you can access that equity. It's just that you have to understand from a financial standpoint, you have to be able to demonstrate capacity and the ability to repay the loan. So it's an addition, because it's an additional debt that you're taking on. And so, yes, you have to take that into consideration. Also, you have to understand with this type of lending, the interest rates that you're going to pay and the term. You have to consider, in all things, consider all things. And so you have to just make sure that you look at those things carefully, make certain that it's going to work with your current budget, that you're going to achieve the end result that you want, and that it's going to be able to give you the cash that you need in order to complete whatever purchase or whatever the purpose is, that is going to satisfy that purpose. Because this is something that it's going to be a long-term commitment. So you just always need to take a look at everything and make sure you understand what the expectation is.
So real quick, I just want to something that you said. You said that you have to show the capacity to repay the loan. Mm-hmm. So the house isn't collateral. You still have to show something beyond the property itself.
The house is collateral. However, you're still taking on another debt.
Right.
And so depending on whether it's a cash out refinance or you're doing a standalone equity loan, there's still going to be a loan payment. Right. That is going to be added to your debt to income ratio, and it is going to be considered by the lender for repayment. And so you have to be able to show income and credit capacity to be able to manage that.
Okay.
So that's how I was going to just recap on pretty much what you said. So some things that I heard was, and it was really good information, especially like I have a lot of clients that purchased brand new last year, and one particular client that I could think of, like her home has probably increased in value $90,000, and she hasn't even hit probably her third month being in the house. But she locked in her price last year, and by the time they started, she moved into her house, they were already building homes. There were the same similar plan. There were $100,000 more than what she locked it in. So in essence, for her, as an example, she has an estimate of about $100,000 in equity alone, just on the increase of value of the property.
Exactly.
And because there is no limitation of when she can take that money out, being that she probably has just now gone into maybe her third, payment, a house note, she can go in if she qualifies, if her debt to income ratio is not excessive,
Excessive, exactly.
if her credit is still good, she can access her that $100,000 today if she meets those requirements and she is able to meet the terms of when she can pay it back. So pretty much if she can handle those two mortgages, because that would be two payments, two loan payments. I shouldn't say two mortgages, but two loan payments.
Exactly, two loan payments. And then understand as well, just like it's the same with any other type of lending, they're going to limit, in most cases, unless you're doing some type of home improvement type product where you have some of the contractors where they offer in-house financing. Say, for example, if you want to install solar panels or something like that, in some instances, they will allow you to borrow up to 100% of your equity. But in most cases, most lenders are going to limit you to about 85 to 90% of whatever that equity is. But yes, you do still have to be able to qualify for that payment, for that additional debt.
So you say 85 to 90%, which brings me to ask, where is that? So is the process like buying a house all over again? Where does that number come from regarding that? How much equity you have in the house? Let's just say if your house appreciated, is it like buying a house all over again? Appraisal? How does that work?
It depends on the type of financing that you're looking to do and how you structure it. Obviously, if you're doing a cash out refinance with a mortgage lender and you're doing a first mortgage, in most instances, they will require an appraisal, a new appraisal. If, say, for example, in Dana's example, where she just purchased her home 3 months ago, you may find a lender that is willing to accept that appraisal to establish the current valuation of the property. But in most cases, there's going to have to be some document instrument, whether it be a full-blown appraisal, whether it be a BPO appraisal, which is a broker's price opinion appraisal. There's going to have to be some way to establish the current value of the home. And then, of course, the financing is going to be structured based on that valuation.
Okay. Now I heard you mention like a cash payout refinancing. So what would be the difference between if I do what is a cash payout refinancing?
A cash out refinance is where you take your existing mortgage and, as I said, you refinance it at a higher amount than what you actually owe. Let's just say, for example, you have a mortgage and that mortgage is, say, $100,000. Okay. And your current home, the value, it's worth $200,000. Okay. And so in a case of, most lenders will allow you to do 90%. That means that you can access up to $180,000 of that value, based on the current of what you owe and the current valuation of $200,000. And so what you're going to do is they're going to take into consideration what you already owe. Obviously, there's going to be some fees involved in the process because no one, does business or does anything for free. And so depending on what those fees are, that's going to be subtracted from the equation. And the difference is is what you want to actually cash out. Let's just say you need $50,000 to complete some improvements or something like that to your home. And then, so what you would do is the new loan is going to be for $150,000. They're going to pay off the existing mortgage, and then you start over on a brand new loan based on the $150,000, which is the current, is the current loan amount based on the amount that you want to borrow. And the difference between what it takes to pay off that current mortgage is cashed out to you. So that's considered that's why it's called a cash out refinance.
Okay.
So how much of that do you consider what the borrower is going to do with that money? Does it really matter if they want to invest it, if they want home improvement, if they want to go on vacation? How much is
you can do whatever you want to do when you're using your property as collateral. So, I mean, in most cases, yes, they're going to ask you the purpose of it. Some people use it to consolidate debt. Some people use it to make other investments. You can use it to find whatever the cash is going to be given to you. And so nobody's going to come back and monitor and ask you unless for whatever reason, let's just say, for example, if you need to pay off debt in order to qualify for the new loan, then yes, they're going to require proof that you pay off those debts because that's a stipulation of the loan approval. Otherwise, you can take those funds and do whatever you choose to do with them.
All right. So let me just say, if you guys are just tuning in with us, we are talking home equity loans with Karen Newman of NMLS. I'm sorry. That's your MLS number, but of NRL Mortgage. Of NRL Mortgage. So Karen Newman is here, and she is giving us so many great nuggets on what is home equity loans, how you can use your home equity loans, how you can tap into your home equity loans. And so we just finished discussing about what you can use your equity loan for. And pretty much you can use your equity loan for whatever. You can use it to pay off debt. You can use it if you want to go on a vacation, if you want to go in and do some repairs to your house, if you want to go and purchase another home. One thing that Roland and I, we consistently tell our clients once they purchase that first home, don't sell this house. Do not sell this house. You go in and you pay on this. And, you know, I always at the closing table, I send my clients a text right then and there to give them a mortgage calculator to show them how they can pay their mortgage off quicker, which essentially you're paying more into your equity, you know, and increasing your equity that way. And use your home to purchase another home and let that first home become, you know, an extra source of income for you and your family. But it is a way to invest. So I'll just say before we continue this conversation that this is the time to check into your home equity, to see how much you have in your home equity, to see what are some prices. Contact Roland and I, and we can discuss with some investment properties that are out there on how you can go and use your home to purchase another home, even if you go and put a renter in there. That's another source of income that you can be, you can be using for your home equity. So, go ahead.
Yeah, I just posted an investment property like 2 or 3 days ago, and it's already gone. The property was going for $175,000, and I did an analysis on it, and I figured in tip-top shape that the property could be sold for up to $250. You know what I mean? And I know that it wasn't going to take $80,000 worth of rehab. So that was a perfect opportunity. Right. And of course, everybody's not ready for it. But when I went to go check on it this morning, it was already pending. So it's gone, you know. So you can tap into that equity and get with me and Dana, and maybe we can put you on some properties like that. Right. We love doing that. And like she said, you can do what you want to do, but we personally just don't believe in selling properties. We just think that it can be used as an asset, and it just leads to generational wealth. You know what I mean? So
absolutely. And that's what it's all about. And that's what that's the biggest takeaway, I think, is that people need to understand is that having equity in your home is a great benefit. It's a great asset. But you have to leverage your assets in order to build wealth, as you mentioned. And unfortunately, the only way to do that is through creating other debt. And that's, I think, you know, one of the biggest drawbacks, and that's one of the biggest areas of confusion. One of the things that I do want to emphasize is that when you're using your primary home, particularly with a, for example, like a cash out refinance, you don't want to sell that assets. You can't. In other words, there are limitations as to after you take out after you open a cash out or you do a cash out refinance, you cannot sell that property immediately. And so there are some limitations about that, and your lender will discuss that with you. And so, you know, yes, you don't want to say, well, I'm going to access the equity on my home that I have now, and then I'm going to immediately take that, buy another home, and I'm going to sell this one. There are some time frames that you do have to adhere to, and I want to say it's 6 months that you are restricted from being able to sell that property. But then after that, you know, then and of course, if you're going to use it, you know, and transition it to an investment property, then that's not an issue.
Okay, so let me ask, in regards of interest rates. Now, we know last year interest rates were ridiculously low. They were like at 2%, in some cases. And then now it's starting to creep up to really where it's normalizing. But a lot of people feel like the interest rates are extremely high. I'm still seeing something about the fives. But I know in some cases, if you get down payment assistance, it's a little bit higher, more in the six. So I'm going in to go get a home equity loan. What should I expect for my interest rates to be? Is a possibility for me to get a lower interest rate because I'm borrowing against my own property?
It's not going to be a lower interest rate, and I'll be perfectly honest with you about that. Typically, your equity loan rates, especially, for example, like if you're doing a standalone, when I say standalone home equity, in other words, you're going to leave your current mortgage intact and you're going to take out a second mortgage, then yes, those rates are going to be, they're not going to be the same as if you were making a home purchase. Okay. They are going to be a little bit higher, depending on what you want to use the money for. Once again, all of those things have to be taken into consideration when you're evaluating what you want to do, and you're developing your strategy for accessing or leveraging that asset. Because yes, the rates are going to be a little bit above market, but if you're investing that money into something that's going to make you money, then of course you have to take that into consideration as well.
Right.
So it can still be a benefit, is what I'm getting to. It can still be a great benefit for you.
Right. You got to assess your risk.
So,
absolutely.
Yeah.
Absolutely.
So what happens if within the equity loan, your house depreciates? Does that affect the loan, or is the mortgage lender left holding the bag? How does that work?
I mean, no, it's not that they're left holding the bag. You have to understand, just like anything else, the value of an asset is only, I mean, it is what it is based on current market. And so timing is everything. Okay. Once you have the financing in place, no one's going to be, doing an annual valuation and saying, okay, well, you're going to have to give us back this. No, that's not how that works. It's based on the value of the asset at the time that you take the loan. And that equity, the amount of it, is going to fluctuate from one year to the next based on market conditions. And so timing is everything. You have to determine, develop your strategy, figure out what it is that you need to do and what you want to do, and then pick the best time to do that. And right now, with, real estate values being what they are, if this is something that you're considering, then this might be a good time for you to do that.
I was thinking it when you was like time, and I was like, this is the time. And not just, and I want people to understand too, we're not just saying this because we're realtors and we're like, we want you to, yes, we want you to come and choose us as your realtor. Yes, but at the same time too, we see the market, we see what's going on. And for people, I mean, everybody sees what's going on. You definitely have inflation. You definitely have, the interest rates going up. So things are kind of starting to stabilize out a little bit. So where we saw those spikes, like I gave my example of, young lady who locked in her price at 300, and then the next year she could sell her house for 400. We're not seeing, and that particular builder literally was going up every two plans. The price of that plan was going up $20,000. So you're talking about probably a $20,000 increase that could have happened in weeks. So we're starting to see it stabilize where, we're not seeing a $20,000, spike in a particular real estate property in weeks, but, eventually it probably will go up, but just not as crazy as it has been going. But even if not, it's starting to stabilize. So as a buyer, somebody who wants to tap into your equity, first of all, now that my equity has increased in value because the crazy market of last year, I need to tap into my money so that, because while it's up here, I need to tap into my money before it starts to,
because it could change down. And it does. I always say, this market it cycles, and right now, we're kind of at the top of the cycle as far as valuations of real estate and things like that. There could possibly be some changes, and I'm not going to even get into that argument because I know everybody, there's a lot of opinions out there. Everybody has one, and so do I. But the thing about it is that figuring out ways to build wealth and make your money work for you, I think is something that we all should be taking into consideration. And like I said, timing is everything. We don't know how long we're going to be here, but for right now, there are some options that you can take advantage of.
Yes, capitalize on that time. So,
Absolutely.
We're almost approaching our end mark, but I just, again, if you guys are just tuning in, we're talking to Karen Newman with NRL Mortgage, and she's giving us all kinds of great information and great nuggets about what home equity loan is, how you can tap into your home equity loan, how you can assess, what you should do with your home equity loan, interest rates, all that good stuff. So if you haven't, didn't start off with us at the beginning, you can go back and watch this video later, but you can contact her directly. Her information, her email is on here, karen.newman@nrlmortgage.com, but we'll have her phone number and things also in the post, so you can contact her directly if you want to know about your home equity loan. And with that being said, so I have my mortgage with, ABC Mortgage over here, and I contact you. Can you assist me in accessing my equity loan?
I can assist you with a cash out refinance as a mortgage professional. If depending on what it is that you're looking to do and what options would work best for you, if I am not able to facilitate the loan myself, I can definitely point you in the right direction. It's just, you need to speak with someone who is going to give you a general understanding of how this works, as well as answer your questions.
Okay. Roland, do you have any?
Yeah. For those who are just joining in, can you just kind of recap really quick what the qualifications are? What are you guys looking at to see who will even qualify for a home equity loan?
Well, it's going to be standard, like I said, standard credit criteria is the same as for any other type of financing. Typically, you're going to need a mid score of at least 640, 650 or higher. The higher the presentation, the higher the mid score, the more options you will have for financing. It all depends on whether you're doing a standalone home equity loan, home improvement loan, or a home equity line of credit, or if you're doing a cash out refinance. The structure is different for each type of financing. They offer a variety of terms as far as repayment is concerned. Once again, it just depends on how you plan to structure the loan. You want to make certain, of course, that there's no like prepayment penalties or things like that, especially if you're using it for investment purposes where you may need some short-term financing for something. And so you want to, explore those options as well. But there's several different ways to do it. It just depends on what, how much equity you have, the terms, but you do need to have acceptable credit.
Is there a minimum amount of equity that you have to even get started?
Once again, it all depends on the type of financing that you're looking to do. In most cases, for a cash out refinance, which is going to be a first mortgage, you're going to want to, the loan amount typically for most lenders is going to be $100,000 or above. There are ways to do it with loan amounts that are below that. But once again, that's a different structure. It could be just like a standalone, like a home equity or home improvement type loan may work better for smaller loan amounts. And so it all depends on individual circumstances. I don't like to really kind of elaborate on things like that on a platform like this, because people will say, well, you said, and I'm like, well, it's not.
You're just giving general information.
I'm giving general information.
Right.
Call me and we can talk about it. How about that?
Right. We can talk about your specific situation.
Absolutely.
But right now, this is general.
Right. This is just generic.
I got you. So before we end, Ms. Newman, do you have any last minute things that you want to express as it pertains to home equity loans, or anything in regards of you talked about timing, some nuggets that you want to just leave the listeners with about what you have to offer? You can also throw that in there too. What are some programs too that you have to offer, even aside from home equity loans?
Well, at NRL, we offer a variety of different programs, depending on what you're looking to do I think the important takeaway from this session needs to be is that if you own real estate, you have a valuable asset. And as many people that now it's kind of more popular now for people to look at, they're looking at ways to build wealth. They're looking at how to leverage their assets, and I'm excited about that because a lot of times, particularly, with younger population, you know what I mean? We didn't think about that. When I was 30 years old, I wasn't thinking about, I owned a home, but I wasn't thinking about any of this. None of this was on my mind. And in looking back, had I done some of these things and invested it a little bit more time and used my money a little bit more wisely, maybe, I'd be in a different place. But such is life. However, if there are ways that we can educate to help other people that are coming behind us, that's what this is all about. It's all about sharing information to help everybody else, or the people that desire to do so, to be able to leverage their assets so that you can leave a legacy. That's right. What it's all about.
Right. And so you guys can see why we partner with Ms. Newman and why she's definitely one of our go-to. You can also come to our workshops every third Saturday. Ms. Newman is there every third Saturday from 12 to 2 at the Shape Center. Exactly. Dropping all these nuggets and giving you all this good information. And you can sit down and have a one-on-one. So we always, stress about the workshop that we don't do a general classroom setting, because just like Ms. Newman said earlier, why she doesn't want to get into specifics on a platform like this, because everybody has a specific, method of how they're going to achieve their real estate goals. So whether that be a home equity loan, whether that just be your first home, whether that be investment, buying, selling, whatever it is, everybody's route towards their real estate goal is totally different. So, right. So you can come and you can call Miss Newman. Like I said, her information. You want to give us your phone number right now, Miss Newman?
It's 281-813-7740. It's 281-813-7740. And my name is Karen Newman with NRL Mortgage.
Right. And her email address is right there on the screen. And again, we'll list her information down there below. So you can reach her directly through phone or through email, or you can just come on out and see her every third Saturday from 12 to 2 p.m. at the Shape Community Center. That's the one that is on Live Oak. So every third Saturday, 12 to 2, and then I will hand it over to Mr. Hennigan to close us out.
Well, I'll just start by saying this was a great segment. I think I learned something. I'm supposed to be hosting it, but I feel like a student. I'm ready to get a home equity.
Right.
Mission accomplished.
Right.
Yeah, for real. So I really appreciate you doing this, and I hope everybody listening now or who will be listening in the future will take into consideration everything that was said. Will reach out to either myself, Dana, or Ms. Newman on a home equity loan, or whether it's the loan or the workshop. Maybe you don't have a home, maybe you need a home. So you can come and get all this good one-on-one customized information every third Saturday at the Shape Center in 3rd Ward. Come check us out. Once again, thank you for tuning in, and we look forward to seeing you next time. Just follow our page. I don't know.
We do it every first Tuesday of the month. So we'll have I think we have Carrie coming up, our one of our go-to inspectors coming up talking about home inspection. But we do it every first Tuesday of the month. We do Realtor Tip Tuesday, but you can always watch these videos. They're always posted. We don't delete them. So you can go back and watch this video about home equity with Karen Newman. A lot of great information. Like Roland said, I learned some stuff on here. I was like, okay, that was really good information. Like I didn't know that. So yes, mission definitely accomplished. And I just thank you, Ms. Newman. And we always, are appreciative of when we get to talk to you. I feel like you always drop little nuggets every time we talk. So
well, thank you guys for having me. I do appreciate you having me on this platform. And so anytime I can be of service, let me know.
All right. Thank
Absolutely.
you. Don't hang up, but we're getting ready to close out and end today's broadcast. So thank you all again for joining us for another Realtor Tip Tuesday. I hope this was great information for you all. Again, you can join us next Tuesday. The next Tuesday is going to be the first Tuesday of the month within August. I don't have that exact date, but we'll post it on our Facebook page. And you can always catch us in person every third Saturday at the Shape Community Center and on Live Oak from 12 to 2, where we host our free home buying workshop, and you guys can come out and you can speak to Roland and myself, also Miss Newman, and then we'll have credit specialists. At times we have our inspectors and things there as well, but it's just a great place to come and get a wealth of information. We're here to hold your hand and to educate you through the process of real estate. I won't even say home ownership, because some people, you can come there if you're looking to sell your home, but you just want to get information about, real estate. Go ahead. You had something to say before we end?
Once again, thanks for coming out. Appreciate y'all. We'll see you either at the workshop on the third Saturday or tuning in again on the first Tuesday of the month.
Yes. All right.
I got it right this time.
Good job. All right. Thank you guys, and we'll see you next time.